I've just decided not to do a deal on a portfolio, and last year I decided not to buy a hotel that I was offered. Am I just doing this because I can do it rather than I'm doing it because it's a great deal? Maybe one deal, maybe your next deal could be enough to replace your income. So when you get to that point, rather than doing more and more and more, maybe you should take a step back and think, okay, what do I want to do? Do I love property? Hello and welcome to this week's episode of the Property Magic Podcast, which is all about don't break your own rules. When you're investing in property, it's really important you come up with some criteria on what makes a good deal for you and what doesn't make a good deal. And I have actually found what looks like a good deal, and I've maybe tweaked my rules a little bit, and I've realized actually I shouldn't do it. You've got to be really strict about what are your parameters and make sure you only do great deals. Especially right now, there are so many deals out there, you should only be doing really great deals. And what makes a great deal? Well, it kind of depends on your criteria. You might want a certain cash flow, a certain return on investment. I like it if you've got a couple of exits as well. So if what you're doing doesn't work or things change, you can then adapt the property and use it in a different way. I see too many people buying properties that are not great deals, particularly when they're new on the property journey. Maybe they're a bit eager to buy a property. Maybe they haven't educated themselves properly, or maybe they're not clear on what makes a good deal for them. I want to make sure you avoid that mistake. And even now, after 30 years of investing in property, I've just decided not to do a deal on a portfolio. And last year, I decided not to buy a hotel that I was offered. And let me talk a little bit about those deals because hopefully it will make sense to you. Whether you're talking about a single property or portfolio, you need to make sure you follow your own rules. So I was working with two people I know very, very well, and I'm very happy to work with them in a joint venture. I respect them, they know what they're doing, and they came to me with an opportunity, a big portfolio that could be secured on an option. And I love options, one of my favorite strategies. And usually when you do options, you don't put a lot of money in, you get to control an asset, you don't need to get mortgages, you don't need big deposits, you get cash flow and you get the potential equity growth. Now the problem with this, they negotiated a deal, and whilst there was some good cash flow coming from it, the owner wanted some money up front, which is fair enough. The option price was pretty close to the market value, and the option was for 3 years and for 4 years. There's a couple of blocks of flats, entire blocks, and I like buying blocks as opposed to individual units. However, I just felt, you know what, I'm not sure there's enough scope for capital growth in the short amount of time, given that we're buying pretty close to the market value. And I thought, actually, I'm probably breaking my own rules here. When I do an option, for example, I like to get a 50% return on investment. What that means is if I put money in, and sometimes you do need to put some money into option deals, I want to make sure that money comes back to me. So within 2 years, I've had all of that investment back. Thus, it's a 50% return on investment. And that way, I've got a couple of years of potential profit, I've got a couple of years of capital growth, and I'm happy to do that deal. In this situation, it wasn't a 50% return on investment. Even though I liked the people I wanted to do the deal with, and it was attractive and it was a healthy cash flow, I thought, you know what, Simon, it's not meeting my rules. So I decided to respectively pull myself out of that particular project. Similar thing, about a year ago, I was offered a hotel. And again, I like to do creative finance deals. This was going to be vendor finance. It was a hotel which the owner, I don't go into too much detail here because it's online, but the owner had, for various reasons, started to scale down the attention they could spend, the time they could spend on this particular property. His partner wasn't very well, and he quite rightly wanted to spend more time with his partner. And so he wanted to sell this asset. It wasn't being utilized. There was a restaurant in the basement which wasn't even open. There's potentially lots of weddings. And this guy was a very well established, had some good coach tour parties. It's in a good location, good building, a lot of things stacked up, and he was prepared to do vendor finance. So I'd have to get finance for the majority of it. He'd leave, I think, about $600,000 in the deal. He'd get a good rate of return on that. And I think I was more attracted to the vendor finance aspect, the fact it wouldn't be much money in. But actually, I realized, although there was a management team in place, I would have to put a lot of time and effort in. And I've got to the point in life where I don't want to add extra complexity. I don't want to add extra noise. I don't need to do any more property deals. I do invest in property because I want to stay up to date with what's happening. And of course, I want to add extra cash flow to my portfolio, but I don't need to do anything. And I kind of got into that point where, am I just doing this because I can do it rather than I'm doing it because it's a great deal? And that's a trap I see many property investors fall into. They swap whatever their job was or their business was, they get into property, they start making money from property, start building a portfolio. And I notice people start to get onto the property hamster wheel. They move from one project to the next project to the next. What that means is they're building these valuable assets. But the problem many property investors have is actually they don't have enough cash flow, because the money they make, they're putting it into the next project or they're putting it into the refurb. And by the way, I've been there. I've done that mistake myself as well. And I think sometimes people are doing projects just because they get addicted to the buzz. They get addicted to the doing the deals. And actually, if they just stopped and enjoyed the benefits of the properties they already have in their portfolio, for many people that might already be enough. And I think I've done a podcast on this a couple of years ago about when is enough enough. And it's a really important thing for you to know. What is your figure? What do you need to be generating for your properties, and work out a plan to get there? And actually, if you're doing bigger projects, what I call mega deals that make 3,000 to 5,000 profit a month, maybe one deal, maybe your next deal could be enough to replace your income. Or if you're being a bit more modest, you're doing smaller deals, but you're doing HMOs or SA that should make £1,000 profit a month, the average person might need only 3 to 5 properties to completely replace their income. So when you get to that point, rather than doing more and more and more, maybe you should take a step back and think, okay, what do I want to do? Do I love property? If I won the lottery this Saturday and it was a 100 million prize, would I be doing property on Monday? And if the answer is yes, because I like to take properties and renovate them and bring them back to life, well then great, that's maybe something you should do. But if actually the answer is no, I want to go and do this, this and this, if you've got to the point where you've replaced your income from property, maybe that's the time to stop, recognizing that's enough. You're still going to get the benefit of the long-term capital growth from property, and then really spend time doing what you want to do. So I think it's really important for everybody watching this to come up with, what are your criteria? What's the goal you want to achieve? What's the criteria for properties you want to put into the portfolio to get you to that goal? And when is enough enough? Don't fall into that property trap of doing property just because you can, just because you should, just because this is what you do. Is that really your identity? Is that really who you want to be? Maybe there are other things you can do. For me, the reason I invest in property, and many of the people I help invest in property, it's not because we're passionate about property, it's we're passionate about what property can do for you. And when you get to that point, we have enough income coming in from your property to replace what you earn from your job or your business, that's the time when you have true freedom, true choice about how you use your time and what you do with your time. And for me, that's the real motivator. It's not about having lots of property, not about the cash flow, it's what the cash flow can do for you. So here's something to think about, and I always like to make sure you've got at least one action or one thing to think about if you watched or listened to this podcast is, once you've replaced your income, what would you like to do with your time? If time and money is no longer a problem for you, good for you, but what do you really want to do? Maybe it is buying more properties, growing the portfolio. Maybe it's buying businesses. Maybe it's investing elsewhere. What would you like to do if you didn't have to work anymore? And that's a great question to ask not only yourself, but also if you have a significant other, a partner, ask them as well. You want to be aligned with your partner on the same track. And when you have a goal that you can both work towards and you have a really good reason why you want that, it's actually going to help you be more successful in your property investing journey, because you're going to prioritize that goal, you're going to work towards it. Whereas if you're not really clear what you and your partner and your lovers want out of this, it's very easy to be distracted by lesser goals. The reason most people don't achieve their goals is, frankly, they don't put enough time and effort in to achieve what they say they want to achieve, because they've not made it important enough. Whereas if you make something a priority, you make it a must, and maybe give yourself a really short deadline, you'll have to change your behavior, the way you think, the things you do, to make sure you hit that deadline. So maybe you should get clear on what you want, put some deadlines in place, replace your income, and then work out what you really want to do with the rest of your life. I do hope you've enjoyed watching this episode of the Property Magic podcast. Please like it. Come and put below in the comments, what would you do if you didn't have to work anymore, if you had all the time and money you wanted? Also, subscribe to the YouTube channel and hit the bell icon to make sure you're notified anytime a new video comes out. Until next time, I encourage you to invest with knowledge, invest with skill.